All right, so welcome everybody. This class will be a very important one. It's going to be on the 5-second fusion model, basically how to trade the fusion model from the 5-second with a lot of accuracy. And basically it generates a lot of setups in a very short amount of time than you would normally see if you were trading something like the 30-second or even the 1 minute. So before we start talking about what it actually looks like and how to enter and all that kind of stuff, we do have to first go over a few things. The first couple of things we need to talk about is what is the fusion model at its core, because it's going to be very important for when you see it on the 5-second, because all we're doing is simply taking the same exact logic that we use for the fusion model on the higher time frames. We're just applying it to the 5-second. That's all we're doing with this. It's nothing different, which is why I call it even the 5-second fusion model, because it's the same thing. But the fusion model at its core, all we're looking for, or all we're looking at, are the creation of higher time frame OBs when they're forming, and when they also get tapped into, we look for reactions out of them. We're looking at standard deviations on multiple time frames, being the current time frame we're looking at and the higher time frame. And we're looking at order of operations and how reversals form. We're looking at premium and discount, and the fifth one that we're looking at, time, basically when the higher time frame candle is about to close. Okay. And also another thing about the fusion model is you will have to be cautious when we are about to make an FEG. Okay. So that's kind of lines up with our time rule. Basically, you're looking to be kind of aware when we're about to make an FEG on the higher time frame. Okay, your biased time frame. Now, since we got the core out the way, let's talk about what exactly we're doing in relation to the fusion model. By even doing this, remember the fusion model basically has 3 time frames you're looking at. It's going to be your entry time frame, your bridge time frame, and your bias time frame. And for the 5-second, it's like this. We have our entry time frame, the 5-second, our bridge being the 15 and 30-second, and our bias time frame being the 1 minute. Okay. Now the 5-second, of course, is going to have multiple moves. The 30-second or 15-second will have basically one OB that you can look at once you have formed your entry. And then the 1 minute is going to tell you the actual direction, and also maybe the 5-minute. Okay. We're going to go over multiple examples of this. Don't worry. For now, it's all just words. Now, one thing I do want to say before I actually show you guys multiple examples is the line chart is going to be your best friend for this. So keep this in mind. The line chart is your friend. Let's just jump right into it. Let's look over some examples. So for this, I'm going to go back to Thursday. For this example, I'm just going to put on the FEG indicator and have it set to the 1 minute. We're going to show only the 1 minute FEGs. And then we're going to turn on the higher time frame indicator to show us the 1 minute only what the 1 minute looks like, because that's really all we need for our bias, right? Okay, so once again, using this as our guide, our entry time frame is the 5-second, the bridge is the 15, 30-second, and our bias is the 1 minute. Okay, so you can see currently that we are absolutely dumping, right? We're just absolutely dumping. We don't even know what the draw is. We're just going to this kind of blind. But since we're dumping, you can see the trend is basically bearish, which means we should only be looking for shorts on the 5-second. Now, the entire point of this model is that you want to enter where the CISD is. But we're just going to fast forward to price a bit. You can see we're still dumping. Okay, we're coming up a little bit. Where would our CISD be on the 5-second if we were to get one? It would be right here to the upside. This would be a potential CISD. If you can't see it, once again, the line chart is your friend. You go to the line chart on TradingView. If you can't, if it's not like this for you already, then you just simply go up here to where it says bar style, find where it says line, put a star by it. It'll be up here for you, and then you just switch to the line chart. Okay. Now, the reason why this would be our CISD is because if we close past this, like that, you know, would be used as a CISD, and we can basically draw standard deviations off of it. That is the entire point of this model. From the 5-second specifically, you want to enter where the CISD is. Where is the CISD when you draw standard deviations? It's going to be at the 0. Another easy way to think about it is the 0 is your entry, and -1 is your TP. What this means is that you basically will get a 1-to-1 trade every single time you take the trade. Okay, that's what that means, every single time. Now, let's talk about, is this actually a good trade if it was to happen? Okay, because our entry would be here at the 0 if we were to close past. I'm going to put it back in candlestick form now so we can see. Would this be a good entry? The answer is no. Why would it not be a good entry? Because for one, the 1 minute is bearish, right? We want to trade with the trend. So when you're trading the 5-second, you want to trade with the trend. The current trend is bearish. Okay, if we got a CISD here, yes, the 5-second would technically be bullish, but should we really be looking for longs here? Probably not, because it would be short-lived, because the 1 minute probably just still wants to go down. Another reason why you would not want to enter here is why? because in the fusion model, it says we need to be cautious of the candle that is making the FVG. Okay, what is this right now? This is the third candle. It's 1, 2, and 3. If this candle closes without basically coming all the way up to here, we're going to leave an FVG here, right? Which means you have to be cautious, okay? Another thing, it's not with a trend, okay? Let's see what happens. We basically go down, we come back up, okay? So the CISD kind of happened here, but really, since we made a new structure, it would be right here. Do we trust this for long? Once again, the answer is no. Because the trend is down, we want to be bearish. If our bias is from the 1 minute, the bias is definitely bearish. We're delivering out of an FVG. The fusion model says once we deliver out an FVG, or even when we flip back through the open of the candle, you should be seeing a new leg on your entry time frame. On the 1 minute, you can see here to my right, we tap this FVG on the 1 minute. You can see it here. That's what this massive red box is. We tap the 1 minute gap. Once we drop down like this, the 1 minute is about to flip through the open of the candle back to the downside. What we should see on the 5 second now is a new CISD to the downside, which once again gives us a new standard deviation, or it should. Once again, in the line chart, do we see that we kind of have what we could be a manipulation leg? Yes, because this would be us closing through for a potential CISD. Okay, and it's in the direction of where we want it to go. And if you put it back in candlestick form, you should see multiple bullish candles. Now, I'm not here to get too in-depth with that because that just falls back on a previous video about standard deviations that you would have to watch to understand. But just know if we close through this, it would be valid for a potential entry on the 5 second. Okay. Now, we did close through this. Where would your entry be? Your entry would have been if we retraced back to the 0. Okay. Once again, your entry is the 0, -1 is your TP. Now, if we drew standard deviations here, if we drew standard deviations like this, you can see we already hit -1, which means we already hit TP. What this is this is an example of a trade basically going without you. Once you get better at it, there are some times where you can jump the gun. I'm not going to talk about that just yet, but just know there are some times where you can put a limit order here or a stop sell order, anticipating price to just dump through this, or basically just jumping the gun on us closing through this and then potentially getting the retrace, because you never know when we get the retrace. But bottom line is you could have maybe entered this if you had noticed this new leg potentially forming just off the fact that we had straight bullish candles all the way up to this gap. Bottom line is we left the entry, okay? If we're waiting for the retest, we didn't get it. We went without it. We hit -1. Cool. We missed the entry. The one thing I want to explain about the 5 second, okay? Do not feel like you're missing out on plays. Just because this one didn't get tagged in on the first try does not mean you should feel like, oh man, I missed the entire move. Okay, even if it is, you know, in this case, it would have been something like 61 points, right? And then another thing I forgot to mention is that your stop loss would have to be on the high or low of wherever your standard deviation is for the 1. Okay, so your entry's at the 0, your TP's at -1, your stop would be at the actual 1. Just to keep it incredibly simple. So once again, it would have been like this, but it never got the entry. What we do now in the 1 minute, if we're looking back to our kind of guide here from the fusion model, be cautious of the candle that makes the FVG. What is this again? It's a third candle. If we close without coming all the way back up to here, what are we going to get? We're going to get another FVG. One thing I forgot to mention, for your actual places of where you want to see a new leg form on the 5 second, you need to find an area of interest on the 1 minute. It is that simple. So for your 5 second entries, all you need is a 1 minute area of interest. And these area of interest are going to be 3 of them, sometimes 4. Your only area of interest that you're looking for are 1 minute FVGs, potential swing points, and OB taps. Simple as that. Okay, what happened here? We tapped the FVG, we got a new leg. This is where you expect to see a new leg form once we tap the FVG. Not here, because this is when we're actually making it. That doesn't count. This right here is when we actually tapped into it on the 1 minute. You can see it here clear as day. Now what we're doing again is we're making an FVG. We're about to make one, which means once we make it, we need to be looking to see if we tap the 1 minute gap that we're about to make and maybe get a new 5 second leg. That could be an entry for us. Okay, let's see if we get that. Looks like we just kept dumping. Okay, let me pause it right there. Now, on the 5 second, would you be looking to take this as a long? Because for one, if you go on the line chart, you can kind of see, okay, there's a hump here, right? We kind of hit -2 of it. And if you even extend it like this, did we really hit anything? Not really. Okay. I'm going to talk about how you can group them together, just not yet. Don't worry about it. But the reason why you wouldn't want to take this one simply is because it's not along with a trend. Remember, the 1 minute trend here is definitely bearish. How can you determine the 1 minute trend? It's simply if we get a CISD or a new OB. okay, because that's one of our area of interest anyways, OB taps. But truly, the 1 minute trend is determined by where's the latest 1 minute CISD. Okay, if we go to the 1 minute right now, the CISD is way up here somewhere, right? It's way up here, right? We never got a bullish CISD. Matter of fact, on the 1 minute, if I kind of move some of this or just move out the way, you can see it's not even possible for us to get a 1 minute CISD currently because we need to close way up here, which means we definitely should be looking for shorts. It's not even possible for us to get a 1 minute CISD up yet. Okay, now going back to the 5 second. Now remember what we're looking for. We want to take a short. Sure, there are potential long setups here on the 5 second because technically speaking, this would be a CISD. Once again, if you go to the line chart, you can see that this hump is getting closed back above. That's a CISD. Yes, you can draw standard deviations, but we don't want to take a long because of the 1 minute. We want to still stay with the trend. Where's our area of interest? The nearest one would be the FVG tap here or a failed OB being made here. How could we tell if this is going to be a failed OB? Say we don't want to tap this FVG above. If I extend this line, look where that lines up with. It would basically be a failed 5 second CISD as well if we don't want to get the 1 minute OB. Why is that important? If you go back and watch the Fusion model, I even said in that video how a higher time frame failed OB will be a failed CISD on your lower time frame. I'm not here to explain that any more in depth. Go back to the Fusion model and video and watch it yourself. You'll see what I mean. Anyways, we're looking for a short here in the 1 minute gap. We don't get it. What is this on the 5 second? Basically a failed CISD. We got one close above. How can you avoid this anyways? Because we're not looking for longs. Simple as that. We're not looking for longs here. We don't even want to take them. Okay. What happens on the 1 minute? No OB. We flip back through the open of the candle. If I back up to maybe about right here, we flip through the open of the candle. We get a new little leg there. Okay. Could this have been an entry? Absolutely. Do we tap into it? No. Unfortunately, not an entry there. This is where you could use the second leg. Okay. That's what I'm going to talk about next, is how you can group the legs together. This is where you also look at your bridge time frame, by the way. 1 minute, we had two areas of interest for the shorts. We had the FEG up top, and we had a potential swing point being made if we don't want to get the OB. Once again, I'm not here to talk about how you're supposed to know that's a potential swing point. That's in the Fusion model video itself. This right here, you can draw as a leg. Absolutely, you can. We hit -1 of this little mini leg. That's not really that useful, right? What you want to do here is either expect us to expand like more to the downside. You would group these together, right? This swing here is one. Just look at the next swing. Don't overthink it. Just look at the next little hump you see. Okay. Yes, this would be a leg if we close to 0. How do you really know that this is going to drop? Because there's a prior leg up here. Okay. If we're still bearish, technically speaking, yes, you could have entered this one. Now, is it low in the range? Absolutely. Is it the best trade in the world? Probably not. But yes, technically speaking, you could have entered this one for the short and just been in a bit of drawdown. Okay, you could have. Yes, technically speaking, you could have. Is it the safest thing to do? No, because of why? I think I removed it. But you need to be cautious of that third candle. That was when we were kind of making the FEG. That's why you wouldn't really want to enter that one too much. But you could have. Okay. Now, if we're using this leg, say we're using this one, why would we be using this one? It's because it's a bigger leg. It's a parent leg. Yes, you need to know about standard deviations. I'm not here to explain that again. Okay. This is our parent leg. -1 is here. This right here at the top is a mini leg. Do they line up? Kind of, not exactly, just a few points off, maybe like 10 points off or so, right? But this would become an entry, a second entry, if you didn't already enter this one to get to the parent one's -1. Okay, that leads me into the next point. The parent leg on the 5 second are very important. They need to be treated with like high regard. Okay, you need to understand what's a parent leg and what's a mini leg. Okay, this is a parent leg simply because it's a bigger leg here. It's more obvious, right? It's obvious. And it's a bigger leg than this one. Okay, this one is kind of obvious too, but it's smaller, right? Now, once again, why I said you would want to group this together. How would you even know? This is where the bridge comes in. If you go to the 15 second, you should see a new leg form in almost the same exact spot as your 5 second. Okay, in my opinion, for this, I recommend using the 15 second to confirm your legs, because the 30 second may not even have it yet. You can see how the 30 second is just a candle, right? But on the 15 second, you kind of see there is this kind of little leg there. That means it's valid. Okay, you can, if I go back to the 5 second here and do it like this, on the 15 second, it's not really there, it's just one bearish candle, right? But it's good because you can still see that there's an OB forming. Remember, if you're on a lower time frame standard deviation, you should see a higher time frame OB. Once again, I'm not going to go over that in depth. It's in the Fusion model video. Okay, but say we close beneath this. We did. if we got a retrace, that would have been your entry, or you could have just jumped the gun again, sort of thing. But either way, we hit TP of the parent leg. That's the most important thing. Once again, the parent leg is the most important thing here. Sure, we may hit -1 of this one, the mini leg. If I just draw this out, we'll call this -1 mini. Let's see if we hit them both. Looks like we missed the mini leg. Once again, the parent legs are going to be your highest or your most important thing that you need to keep in mind, okay? Not the mini ones, right? We stop at -1. What happens when we stop at -1? We have a high chance of reversing, okay? But should we be looking for longs? No, not yet, because the 1 minute hasn't given us an OB. It hasn't given us a CISD yet, okay? Say the 1 minute does give us an OB. Where would we be looking for long on the 5 second? Because it looks like we have an OB here, right? On the 1 minute, all you need to do, once again, for your 5 second entries, all you need is a 1 minute area of interest. Where's our area of interest here? It's going to be the FEG above that we barely missed. And it's going to be the 1 minute OB if we're thinking about taking a long here. On the 5 second, what is this? It looks like a CISD. Absolutely it does, right? A massive one, a big CISD. If you're pattern trading, you're going to take this long. Should you take the long? No, because the 1 minute has not confirmed the trend. But if you're pattern trading, you probably would take this. Okay, I'm going to show you exactly what happens here. The 1 minute has not confirmed that it's actually bullish. We just have a potential OB. You can use this to your advantage on the 5 second because all you need to know is that the OB is where we could get the long. So all I'm going to do is extend this line where we have the OB to the left here so we can see on the 5 second. Remember what we need to see on the 5 second if this was going to work for a long. We need to see a new leg to the upside. Okay, I'm going to fast forward just a little bit. Do we have that? Yes. Okay, a new leg to the upside. You can draw it like this and say we hit -1, or you could draw it like this and say that we need to hit -1 here. Okay, now what ends up happening, I'm not even sure. I can't really remember. It looks like we kind of hit -1 there, just barely missed it a bit, and then we come back down again. Why? Because the 1 minute is still bearish. Okay, so it's either you could have maybe taken a scalp here, maybe got break-evened, maybe you missed the entry again because it doesn't really tap it actually, or maybe it taps it to the tick. But anyways, we barely missed -1. Can't really do anything about that because maybe M and Q hit it, right? It's going to be a few points off sometimes. But just imagine that we hit it here because it's only like 1 point off or so, right? Bottom line is you can still tell that we're bearish because we're getting a new leg right out of the area of interest that we had for the shorts still, okay? And if you were to actually consider this as a real leg, we basically stopped at -0.5. If you know about standard deviations, -0.5 is our displacement calculator, which means this leg here is too good to be true. I'm not going to talk about that in depth. It's in the standard deviation video, okay? Now, say we're still bearish. We're getting a new leg out of our area of interest on the 1 minute because we still basically want to look for shorts. Nothing has said that the 1 minute got CISD. The only time you truly want to change your bias on the 5 second, like say you really want to look for longs, because this was just potential. Remember, this was just a potential long off the OB tap because we don't really have a real CISD. That's the key here. To really be confident in that this 5 minute or 5 seconds going to be starting to be really bullish and you really want to look for longs is the 1 minute CISD. Once again, on the 1 minute, can this become a CISD if we go to the 1 minute right now? No, not a chance. It's the same thing as before. We'd have to close way up here somewhere to even get the CISD, which means the OB tap here would have just simply started maybe a move up to get it. We didn't really get that because we stopped, okay? That's something that you just have to understand, that we're just not ready yet to really fly. We are still bearish because the 5 second has given us a massive new leg out of the FEG again, or really the first time. And you can see that this is a new leg, okay? Now, do we close beneath the 0? Once again, why am I drawing it like this? If I zoom in here, you can see, why am I drawing it like this? Or really like this, right? Why am I drawing it like this? It's because I know what it looks like on the line chart without having to look. You can see on the line chart, I basically drew it perfectly from the edges of the range. Once again, the line chart is your friend. Once you get good at this, you can just look at the candlesticks and do it like that. But if you're new to this, look at the line chart, pick your two most obvious swing points. There you go. That's your new leg. Once we close through the 0. Is there an entry for this one? Not yet. But if we get the retrace, there could be. Do we get the retrace? No. Do you really care about that? No. Because you're not missing out on anything. I think I just removed it by accident. But you're not here to think that you're missing out on anything. You're not. The 5 seconds can give you multiple entries. Multiple entries. Okay? But yes, we did hit the -1. That would have been your TP if it had got tagged in. The 1 minute is also coming back down, looking like it wants to sweep out the low. I'm going to fast forward a bit. You can see that was the third candle. We're coming back to 1 minute FEG and area of interest, okay? Now, one thing I do want to speak on is a standard deviation tips and tricks, because that's what this also is when you trade in the 5 second, is basically standard deviations just on a whole other level. Remember what I was saying first. Your parent legs on the 5 second are going to be very, 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 very important. This is a parent leg because it's super obvious. It forms after we sweep liquidity and it's coming from a 1 minute gap. Simple as that. If you can't identify a parent leg or a mini leg, you shouldn't even be trading this on the 5 second. I'm just going to tell you plain and simple. Once again, I'm going to say it again. If you cannot identify mini legs or parent legs just in general, or even on the 5 second alone, this model is not for you. This is not for you. This is for my advanced standard deviation people, the ones who can actually identify legs, okay? This model is not for you if you can't do that. Anyways, this is a parent leg. We hit -2. Price does go from -2 of the parent legs to -1 all the time, okay? And sometimes we'll stop at -1. If we stop at -1 and get a new leg out of it, trust that leg. It's going to be continuation. I'm going to say it again. Price will go from -2 here back to the -1. And if we stop at -1 or the general area of -1 and get a new leg down, trust that leg. It's very high probability. Let's see, does that happen here? Even if you didn't see this, this is still a 1 minute area of interest because once again, we're looking at FEGs and potential swing points. It's a fusion model. Do we get a new leg? Absolutely. We get it pretty quick. That's a very good sign. We also flip through the open of the candle. Once we tap this and flip through the open of the candle, you should see a new CISD. Do we have that? Absolutely. Okay, we should be trying to get to -1. Do we get an entry? Unfortunately, looks like no, not yet. Okay, we missed it again and we hit -1. Wow, that's basically like 3 or 4 setups here that was missed. That's okay. So this also becomes a new potential parent leg because we closed through -1. Let's see if we get to -2. We basically do. Okay, cool. The 5 second now then goes from what? -2 back to -1. Okay, once again, the 1 minute almost got an OB there. If we get a new leg here, you should trust it. Once again, -2 to -1. Don't overthink it. Basically speaking, we just held the entire zone, not just -2 itself, but we held the entire zone of -2 to -2.5. That's what I'm trying to say here. Okay, that's what that means. We stop in the general area and go back to -1. If we get a new leg out of it, it should be trusted. Do we get a new leg here? Not quite. Should we be bullish here? Because there is a new leg. There is a new leg here. Should we have taken this long? No. The answer is no. Why is that? It's because the 1 minute never even got an OB. The other one was different. The other one, we kind of got an OB back here. I'm just going to go back to here really quick. We did get a potential 1 minute OB here with the close. You can see it closed up here. We got a potential OB, which means all you're doing is looking for maybe a reaction on the 5 second, right? But you still shouldn't be bullish because we don't have a CISD. Down here, once we go back, gonna fast forward a bit. Down here, once we come back to this, the 1 minute never even got an OB, which means it's basically should be a failed CISD on the lower time frame you're looking at, which is the 5 second. Is it a failed CISD? Absolutely. Why is it a failed CISD? Because this got to close and we come right back down. Also, this leg got to close and we came right back down, right? Also hitting -2 of the parent leg from the bottom. Now, I do want to talk about grouping them together once again. Yes, this is a leg on the 5 second. If we grouped it like this, what should we see on the 15 second? We should see a leg kind of in the same spot. Do we have that? Absolutely. That means that you can trust this to extend it a bit, okay? If we extended that leg, did we stop at anything important? No, because it's failed CISD so far. And what do we get out of the failed CISD? We get a new 5 second leg to the downside. That is your entry. That's the one you can take. Because what is it still delivering out of? The -1, pretty much. We basically only spent a little bit of time over the -1. Keep in mind, this is the 5 second. That's what? 15 seconds or maybe at most 25 seconds above the -1. We get a new leg out of it. Trust it. Also, the 1 minute never got a CISD. And if it's a failed CISD on the lower time frame, what should we expect? We should expect a low anyways. Where does the low line up with? Oh, wow, -1. Where's your entry? This time you get the entry. Cool. The 0. Where's your stop? At the high here. Where's your TP? Down here. For pretty much a 1-to-1. It's going to give you 1-to-1 every single time, pretty much, if it gets TP. Does it get TP? Yes. Cool. Can you hold for more? Absolutely, you could have, but you probably would have got break even. The entire point of this model is you just want the 1-to-1 and then worry about the rest. Maybe take off however many contracts you enter off of. Remember though, we hit -1. Did we really stay beneath -1? Not exactly. We basically hit -0.5 or -1.5 there, kind of getting a bounce. Should we trust longs? No, still no, because the 1 minute hasn't given us a CISD yet. But do we have potential for a CISD on the 1 minute now? Yes, we do. If you look right here, this would be a CISD. Cool. So we're just going to extend this black line here. Also on the 1 minute, if say we wanted to drop right now, where would we stop? Or where should we see a new bearish 5-second leg? Right here. Because why? It would be a failed OB here, which should be a failed CISD on the 5-second, which means this could be fake if we stopped here and turn right back around to the downside. Do we do that? No. We actually keep going up. Did the 1 minute get the CISD yet? It looks like it's about to. Okay, cool. We have a potential 1 minute CISD. Once again, potential. Why is it potential? Because we only got one candle close. The next one could have been bearish. How can we tell in the 5-second that this should work? We should see a new leg either here at the CISD tap or the OB tap at the bottom. Okay. Now what you could have done, since we did get the OB at the bottom, you could have been expecting this right here to give us a new leg right here. Right? Why right there? Why am I drawing like that again? Once again, the line chart is your friend. It's either going to be like this or like this. Once again, don't overthink it. It's either going to be the first hump or the second hump. If you want to extend it, say like this. Why am I extending like this? Because if we go on the 15-second, what should we see? Once again, boom, a new leg. Cool. That's how you can confirm if you need to extend it with the bridge time frame, by the way. Once again, say we did long this. Well, technically speaking, you actually could have got TP because it did tap the entry. Actually, yeah, it tapped the entry to the tick and we hit -1. Cool. You could have actually longed this if you were jumping the gun on the 1 minute CISD. But say we're playing it safe. We're waiting for the CISD to really confirm our trend change. We tap the CISD here, right? Which labels stuff out so it's easier to understand. This would be our CISD tap on the 1 minute. Let me mark it out. We tap into it. We get a new 5-second leg, maybe if we close above this. If we close above this, what does this become? A new entry. We close above it, cool. This becomes a new leg, like this. Did we hit -1 yet? Not really. We come back for the entry, and then we hit it. One thing I actually forgot to explain, I should have explained this in the very beginning, is the trade becomes low probability if we hit -1 before getting the entry. Okay, I forgot to explain that. So once again, this becomes low probability if we hit -1. Now, could you have said that this technically is a -1 tap since we missed it by just a few points? Yes, you could have, because sometimes it's not exactly super exact. Sometimes we'll miss it like we did up here or somewhere in here. Remember, there's one that we kind of just barely missed it. But technically speaking, we missed it. Yes, you could have entered this and got TP there for -1. How many points is that? Let's see. You got to stop down here. 46 points there. To get like 40 here. Or 35, 36 points there. Yes, it's valid. All right. If you truly want to go for a 1-to-1, yes, you can have your stop like this. Do I recommend doing that? Not all the time, because sometimes we really do cut it close on the 5-second. But yes, this would have been an entry because you're trading along with the 1 minute. Also, say you want to target more. So -1 is your true TP, right? Because once again, -1 is your TP. But since we're getting a 1 minute CISD, you really can target -1 of that. So once again, you can actually target the -1 standard deviation on the 1 minute. So you can target the higher time frame standard deviation levels as well. And you can see here, -1 of this 1 minute leg lines up with -2 of the 5-second leg. That's exactly what you want to see. Do we end up hitting that? Absolutely. You could have held the trade for more, is what I'm trying to say. Now, once again, our areas of interest on the 1 minute is the FEG. However, we did hit -2. Remember, I was just saying about the standard deviation tricks. We can hit -2 and go back to -1. I don't really have it here anymore. But we can stop from here, -2, and go back to -1. And if we see a new bullish leg out of it, trust it. Do we end up doing that? We kind of hit -1. Do we have a new leg? Not really. On the 1 minute, it's a tiny little FEG, which means we can still look for a long here. Absolutely. Do we get a new leg? Yes. After the 1 minute FEG tap. Now, how do you draw your leg? You can either draw it like this. Once again, why am I drawing it like this? It's because it's kind of compact, but it's there on the line chart. You can kind of see all I did was extend it from the first hump to the second one. Now, if I wanted to extend it more, you would draw it to the next hump. Remember, don't overthink it. How can we confirm that this could be the next hump? If you go to the 15-second, you should see a new leg somewhere around that area. Do we have that? Absolutely. This would be a little 15-second leg right here. Once again, that's how you know how to extend your legs correctly. Do we get the entry for the long? Yes. If we extend it like this. Do we hit -1? Yes. That's the FEG tap up there. That's another trade. That's 2 back-to-back trades in a span of 3 minutes. Once again, you do not feel like you're missing out on anything because this is so frequent. Do not feel like you missed out on anything, even if you couldn't catch the longs down here, because you could have caught this one here. Even if you missed this one here, don't feel like you missed out, because there's probably going to be another entry in the next 2 minutes or maybe 5 minutes, okay? And say you even drew it like this, right? If you do the smaller one, that also gets an entry. Now, this one's lower probability because why? Because we hit -1 first. That's ones you don't really want to take too much because sometimes we'll stop at -1 and fully reverse. Actually, we never even got the entry. But say you drew it like this using the higher time frame leg. Yes, you would have hit the TP. Absolutely. And you could have got full TP there. Okay. Now, off the 1 minute gap, we get a new leg to the downside. Should we trust this to the downside? Yes or no? The answer is actually no, because the 1 minute trend is still bullish, right? Remember what I was saying, the CISD confirms your actual trend. Now on the 1 minute, we're kind of stopping at -1. Technically speaking, you could have trusted this, but it's very risky, okay? Why is it risky? Because the 1 minute trend is still bullish. Now, let's see, does it actually work? This is a 50-50 type of scenario. Looks like it fails, once again, because the 1 minute is not actually bearish. You want to wait for the 1 minute to even give us an OB. Exactly, we need a CISD. Someone in the chat, for anyone watching this recording, someone in the chat said we need a CISD. Not only do we need a CISD on the 1 minute, but we also need at least an OB, at least. Do we even get a 1 minute bearish OB there? No. No 1 minute OB means failed lower time frame CISD. Once again, you can see that clear as day. We never got the 1 minute OB. This is a fake CISD. We come right back up. Now, we do a double sweep on the high. Can the 1 minute get a CISD now? Yes, it could if we close back beneath that candle there to my right. Do we ever get that? Not really. Okay. Backing up to about right here. If that was a failed CISD short, doesn't that mean that this is technically long? Absolutely. Absolutely it does. Now, that leads me to the next point, actually. What actually is a real close above for your CISD taps on the 5 second? This right here is a close above. Sometimes you want to wait for 2 closes above, though, on the 5 second because it's a 5 second. Once again, this can be one candle close above, the next one becomes bearish, and we just drop through it, and then you took a loss for no reason. Especially this being in premium. Remember, premium discount is one of our core rules inside the fusion model, or core beliefs, really. The closes that you want to trust are the strong closes for the CISD. Okay, if it's not a strong close, you want to wait at least 2 candles above it. Do we get 2 candles? Yes. That means that this right here would have been your entry if you were ready for 2 candles. Where's your stop? It's all the way down here. Yes, that is kind of a big stop, but guess what? It's still a 1-to-1 pretty much. Okay, all of your trades will be 1-to-1, even if it's a massive stop. Once again, where you target, you could have targeted -1 here or the next 1 minute gap or even -2 and catch a massive trade, right? And this also in the higher time frame perspective is basically us trying to reach for this swing high up here. Okay, did we hit it? I'm not sure. It looks like we barely missed it. Doesn't really matter. But we hit, or we almost hit -2. Let's see, we end up hitting the high. Cool. Okay, now, should we be bearish off the first leg that we see here on the 5 second? No, because the 1 minute trend is still bullish. Even though we swept liquidity, it still could be bullish. Should we trust this long? No, because even though we close like this, right? For one, is that a strong close? No, so you would only need 2 closes. That saved you right there, just off what I just explained. Another reason why you don't want to trust this. What is this on the 1 minute? It's the third candle that's giving us the FEG. You want to be cautious, especially after sweeping liquidity. Okay, so on the 1 minute, we're about to make an FEG. It's the third candle. You want to be cautious. And number 2, we never got a strong close. We never even got 2 candle closes past for the potential new long. Okay, on the 1 minute, this is an area of interest. If we wanted to take a new long here, we want to see a new 5 second CISD. Well, where the CISD occurred, it basically occurred where that failed one was, right? It'd be here. Do we end up getting that? Nope, we keep dumping. Okay, where's our next area of interest? Well, technically speaking, now this really would be a bearish leg, dosing after the fact, right? Oh, that's okay, you missed it. Say you really were bearish there, yes, you could have taken it, but since we're still looking for longs on the 1 minute, you don't take that, you skip it, we hit -2. Okay, we hit -2, we could bounce and go back to -1. Since we want to take longs anyway, that kind of makes sense. We want to see this maybe for an entry. Okay, on the 1 minute, are we turning around yet? Not really. Do we get the CISD? No, there's no entry on the 5 second. Matter of fact, we keep going lower. We basically hit this next internal low. Now, one thing you have to consider is, once again, premium discount. That's just stuff you're supposed to know already. We are definitely in discount. Does the 1 minute have a CISD? Not yet. Do we have an OB on the 1 minute? Yes, we have one here. Maybe you consider this one as well. But yes, technically speaking, we do have OBs, but no CISD yet. Because if I go on the 1 minute to even get a CISD, it'd be down here. Now let's just do one thing right quick. Let's mark this out. This would be where we have a potential 1 minute CISD. This, if we close beneath it, would fully make us trust in the shorts on the 5 second. Okay, you do have to be comfortable with letting this stuff go because we don't know if we really should be bearish yet. because the 1 minute is still bullish. Okay, I'm going to make that very clear. Yes, we're going down, but do you really want to trust this? Not exactly, because the 1 minute is still could be bullish and we can bounce at any moment. Okay, now what do? We actually tap the FVG. This would be where you actually maybe want to short from, is because we made a bearish gap. That's an area of interest. And how do we know it could be valid? If we get the CISD on the 5 second here. Is this an obvious leg? Yes, because this leg here is way bigger than these candles here, and it would be delivering out of an area of interest. Okay, that's the key. These shorts before had no area of interest except for this one when we swept the high, and that was kind of risky to take. I want to make that very clear. This one right here, you don't take this one because it's not delivering out of an area of interest. Once again, the FVG is also forming at this candle. That's the third candle that's making the FVG. That's why you don't want to take this one. Okay. This one has potential because we actually tap the FVG and we could get a new leg, and the -1 lines up where the 1 minute CISD can be. Okay. Do we get the CISD? Absolutely. This is your entry. Right here, you enter here, stops on the high, target -1. Simple. Do we get it? Yes. Look at that. We hit it. Cool. Remember on the 1 minute, if we close through this, that would give us a real 1 minute CISD. Do we do that? No. Which means the 1 minute is technically still bullish. How can we tell we're bullish on the 5 second? Well, it looks like we're about to get a new leg to the upside. That's kind of a big one. Could be too good to be true, but it's technically valid. Okay. Could we narrow it down on the 1 minute? Yes, because there's also a 1 minute OB potentially about to form. Truly speaking, you want to wait for that 1 minute OB to form before you even take this one, even if we get the close. So we kind of a weak close there. The 1 minute, did it get the OB? Not yet. Not yet. We're still waiting. Matter of fact, we get a bearish leg. No OB, but there's a failed CIC and we get a bearish leg. Should you take the short? You can. It's risky, but you can. Okay. Say we trusted the short here. Is that really a good close beneath it? Not exactly. We only got one bearish candle. We're waiting for a second one through it. Did we get it? Yes, we did. You would have lost here. Okay, I want to highlight that because yes, you can still lose with this model. Okay, but on the 1 minute perspective, so once again, I just want to highlight, yes, you would have taken this one and lost. Absolutely. But you would have won, what, 3 or 4 of them before this one loss? And it was actually kind of decent too because we were delivering out of discount, right? Or premium of the range. You want to shorten premium, right? That wasn't so bad, but you still lost. Okay. Now on the 1 minute, we actually get the OB, and where do we stop? Again, the failed CISD on the 1 minute, which means this really can, if we're stopping at a failed CISD on the 1 minute, this can come all the way back up to here. That's knowledge that you just need to have already from knowing the fusion model, how it works. Okay. Now back to the 5 second, where's your leg? Well, if we're really bullish, you can simply say, okay, we're getting the parent one here, because remember I said the parent legs are the most important. Technically speaking, if you were looking at this parent one the whole entire time looking for longs, you actually would have longed here and been in deep drawdown. Yes, you would have been in drawdown, but does it play out? Actually, yes, it does. And eventually you'll see it. It does play out. So technically speaking, you could have actually taken the long here instead of the short because you're waiting for the long anyways. We actually got the leg. We just never got the 1 minute OB. Yes, it's risky, but yes, it does work. And yes, it's a big stop. Okay. But say you took the loss there and you're trying to make your money back. This leg right here would have been your potential entry to hit -1. Do we hit the entry? Unfortunately, no. Once again, why am I even drawing it like this? Because the line chart, you can see it's like that. If we extended it like this, the next hump over, is this even valid to extend it? If we go back to the 15 second, can we see an obvious leg there? Let's see. Kind of, but not really. Okay. You can consider this one to extend it though, because it's a wick there, and then this would be an OB. So yes, you could actually extend it there. Do we even get that entry? Actually, this one we do. Okay. We do, but you have to be quick about it. You have to be quick about knowing, okay, if we reversed here, right? Now, truly, if you were in that short, you would only get stopped out here, so you actually wouldn't have a chance to enter unless we came back to here. Okay, I want to make that very clear. In live time, you would still be in the short and draw down here and then get stopped out once we hit this high. So you really have to be hoping that we come back to this one if you were to extend it even more. Okay, let's see what happens. Looks like we hit -1 of the parent leg and this new, you could also call this a parent leg. The bottom line is the 1 minute should still be going for this high. On the 1 minute right now, what candle are we on? We're on the third candle. You want to be cautious. You don't want to enter any new longs up here because you want to be cautious. Where's our nearest area of interest would be the 1 minute FVG if we make it. Okay, what happens? Oh, look at that. We had an FVG here. I want to back up to show you. Yes, we had an FVG here for a potential long. We run straight through it. Why does it not matter if we run straight through it? Because the 5 second never even made us a new leg to the upside. Do you trust a short here? No, because the 1 minute is still bullish. We have another FEG down here where that potential entry was for the other long. We tapped into it. Cool. Do you enter this on the tap? Not exactly, because we already hit -1, right? Keep that in mind. We already hit -1. It's kind of lower probability. But what we could expect is a new leg. Do we get a new leg from this? Let's see. If we get a new leg, it's actually valid. We never got a new leg. Okay. The 1 minute's actually dipping down now to where we may even be fully bearish. Okay. But it's tapping into the OB. That's another area of interest for a potential long, because technically speaking, we still should be looking for longs. If we just extend this for the 1 minute OB, do we get a new bullish leg here? Yes, we do. Is there an entry? Not really. Well, if we had a leg like this, it technically delivers a -1. We hit -2, right? This technically speaking is a parent leg. Would you draw it like this? You could have, right? Maybe we hit -2, maybe come back to -1 to get a new leg type of thing. The 1 minute also still respected the FEG. That's a good sign after tapping the OB. If we extended this like this, how can we confirm that's actually valid to extend? Once again, the 15-second, we should see a new leg there potentially. Do we have a new leg there? Yes, it could be. Which means on the 5-second, if we had it like this, you want to see a nice close through there. We haven't got that yet, so it's not confirmed. Let's see if it gets confirmed. This right here could have been your entry. You long here with the stop down here for 70-something points to get to -1. Let's see, does it play out? Looks like it's kind of taking some heat and it's taking forever, but we eventually get there. Cool. That's how you trade this. Now, all in between, I do want to break down the price, because that was just say you're in that trade, right? I do want to break it down. Why do you even enter this one? Okay, because we finally got the close through it. Is it the strongest close? No. Say you waited for that 2-candle close thing. Well, you got the second candle close here. You're still waiting to get tagged in. You would have got tagged in here and been into a little bit of drawdown if you were waiting. Okay, your stop still needs to be here. Once again, at the, where is it? Your stop loss is the higher low at the 1. Okay, your TP is still -1. It's still a 1-to-1, pretty much 0.9 R at the very bare minimum. We hit it. Cool. On the 1 minute, it looks pretty choppy, right? But we still went up because the FEG was holding. Also, say you shouldn't have been, but if you're really bearish here, there are plays for the downside as well. I'm not really going to get into all that. But what the next point I do want to talk about to kind of wrap this up a little bit is the sweet spot for this model is going to be the first hour after open, which is 9:30 to 10:30 is when you want to trade this. Okay, what time is it here? It's basically 10:26. This is pretty much your last trade of the day if you're trading the 5-second fusion model, because after this, it's going to get sloppy. This model operates on high volume. I want to highlight right here. This right here, you can see is kind of low volume. There's not too many FEGs in here, right? If we go back, look how many FEGs we make at 10:19. Look how many FEGs we kind of made, you know, in here when we're going down. The volume's very high. The candles aren't really that small for that long. This right here, the candles are pretty small for probably like 5 minutes straight. Keep in mind, this model gives you entries like every 3 minutes. That's 5 minutes without a real solid entry. Okay, I will be breaking down this price action soon, but I just want you to be very aware. There's multiple entries in here. Remember, you took the long here, right? Then there's like another long in here. If we were really bullish, that's in the span of 2 minutes. This right here, there's not really anything for the next 5 minutes, which means it's probably a 5-minute doji. I'm not going to really get into that. But let's just say you waited to take a long here. Okay, say you waited. Well, on the 1 minute, you'd have to know that this is a rejection block or has potential to be one, right? So you're looking for a new 5-second leg out of this rejection block area. Okay, either that or you're looking for one on the actual close for the OB. Either one, say you didn't know it was a rejection block, just for example. Either way, it's a prop block, so we'll call it that. We'll just go back to the 5-second and extend this black line. Let's see. Do we make a new leg here? Kind of. We have what could have been a leg here, but that's not really a good leg. We have one right here, though, right? This little down move here that gets closed back above. Yes, this technically could have been an entry. If we go to the line chart, what does it look like? That's a hump after a sweep on the low as well, delivering out of the 1 minute OB tap. Yes, this could have been an entry, even though it looks sloppy. But do you really want to take this? Not really, because it's basically 10:30. You enter like this. This is what your standard deviation looks like. Once again, how do I know to even extend it? Because technically speaking, there is a hump right here, right? There's a hump right there, but how do I know to extend this? If I go to the 15-second, we should see what looks to be a leg. Do we have that? Yes. If if I remove some of this, kind of see it. There's 2 bearish candles there for a potential little mini prop low. But really the real leg is like that. So in the 5 second, really, if you wanted to extend it properly, we'd just be using this entire leg right here. But say we just entered this, you have a long right here with a stop there for like 40 points to get 40 pretty much. And yes, it does hit. If we extended this one, the massive leg, say we were waiting for that. Once again, you don't really want to take this though, because it's outside of our sweet spot area. We'd be looking for an entry here because we want to get to -1. This is your entry right there. Yes, it's a massive stop though, like an 87-point stop, but technically speaking, does it deliver? Well, yes, it does. We pretty much hit it right there, or maybe we missed it by like 1 tick. Actually, looks like we hit it to the tick because the -1 is like right on 716.50. So we pretty much hit it to the tick there. Okay, and let's just fast forward to see if it does come back. Looks like it kind of doesn't before getting you break even on that, but pretty much we hit it to the tick. That's bottom line. Okay, and that's pretty much it, guys, because everything else is outside of the sweet spot. But I did just want to make this video to help you guys out and explain how the 5 second model actually works, when you're supposed to change your bias for the trend more specifically, and how you can tell of when you actually need to enter. So hopefully this video helps you guys out, and we'll see you guys in the next one. Peace.